Well, hello everybody, welcome to the Forex market research video. This is the second video in my Forex market research series, and in this video I will do the market research of euro-dollar. Well, I will analyze the swings of euro-dollar using different algorithms, and I will try to calculate what is the average size of the swings in pips, and what is the average duration of swings in bars, based on different time frames, of course. And I already prepared my Excel spreadsheet. I simply copied that from the one that I did previously with pound Canadian. Here's the chart of that pound Canadian, so I don't need it anymore. Okay, so this time I did it this way. I enabled the indicator, and the number of bars I want to analyze is 100,000 of bars, because I first downloaded the data, downloaded the quotes, and now I have more quotes, and I think the results will be more precise than those that we had on pound Canadian, and will have less deviation. Well, that's it. Let us start doing it. I will first go to this time-based algorithms, and I will switch these the period number. Okay, so what if we choose the period 5 algorithm? So I should go here, I should go to application, depth method, okay, period 5, okay. It seems to me we have okay, and the number says that it is 69.8. Sorry, we should go daily. It says 38.16, so we should type 38.6, 381 and 6. This is the average swing size if you use in pips, if you use 5 period extreme algorithm. Okay, then we should switch that to 10. No, I'll go it this way. We then switch to 4 hour, and this says 14.79. 4 hour is 14.79. Then we go to 1 hour, and it says 69.8. 1 hour, 69.8. Then we go to 30 minute, and it says 43.8. 43.8. Okay, then we go to 15 minutes, and it says what it said, 27.8. 27.8. And then we go to 5 minutes, and 5 minutes says 13.6. 13.6. And now let us switch to period 10, and we'll go the inverse order from 5 minute to daily. So the period 10 says 19.8, 19.8, and we have 1.46. Look at this coincidence. It coincides on pound Canadian. We had the same ratio between the swings. Okay, let's go to 15. 15 says 40.1. 40.1, and it is the same, 1.4. Then go to 30, and it says 63.8. 63.8, 1.4. It should stay around 1.4, maybe slide closer to 1.5. Okay, then we go to 60 minutes, and it says 10.21. Oh, 10.21, and it is 1.4 again. And then we go to 4 hour, and it is 21.16. 21.16. 1.4. And then we go to daily, and it says 54.67. 54.67, 1.4 again. Okay, now we will go inverse from daily to 5 minute. Again we will go back, but we will change the period to 15. So I'll change the period to 15 and I go here. Okay, so what daily says is 66.44, so we'll have 66.4.4 and it's 1.21. So guys, if you didn't see the Forex market pound Canadian research, so pay attention to this: 147, 119, 119, 111, or to this 146, 123, 114, 114. So what I mean is that the ratios are the same: 146, 120, and here we have it is price. Here Forex market research 146, 120 something. So they are most likely the same, somewhere around these numbers. The ratios are the same. Obviously we have some kind of pattern here. The dependencies between the period of extreme and the ratios and the size of pips we have, they are all connected, and we can create some mathematical model in predicting future price action based on the average movements. Okay, then let's go next. It is 15 period of daily. Go to 4 hour. 4 hour says 26.82, and if I type, it should be 1.2 somewhere. 26.82, 1.27. Then let's go to 1 hour. It is 12.38, and it should be the same, 1.20 something, 1.21. Then let's go to 30 minute. Okay, and it is 87, 1.26. Okay, then we go to 15 minute, and it says 49.6, and it's 1.24. And then we go to 5 minute, which says 24.7, 24.7. Okay, 1.25, 1.24, 1.26, 1.21, 1.27, 1.22. Some within the range of 300s, not the 300s, one decimal. I'd say 10 hundredths. It is one decimal. It is somewhere 700ths. Within this range of 700ths, we have a precise number. So only 700ths is the deviation. Not that bad. 7%, maybe 7% deviation. Okay, now let's continue. If we go backwards from 5 minute to daily, if I change it to 20, so what is the number? It should be a 114, 28.4, 14 to 16. I forgot. 28.4, 28.4, 114 or 116, 115. Okay, in the middle. Then we go to 15 minute, and it says 58.0, 58, 117. Then we go to 30 minute, and it says 92.9, 92.9, so 115 again. Then we go to 60 minute, and it says 15.08, 15.08, 122. Well, this deviated much from 115, but well, 700ths. Again, 700ths is the difference. Then we go to 4 hour and it says 31.34, 31.34, 4, and it is 117, 200ths decimals, 200ths difference. And then we go to daily, it is 81.17, 81.17, 1.22. Okay, again within the range of plus minus 700ths, plus minus 0.07. So within this range, plus or minus this value, we have pretty valid result. So within the range of, if we have plus minus 0.07, it means that we should have the total range 114 decimals. Well, in this range we are correct. So if you consider this range, you will be also always correct. Okay, now let's continue. So what do we have next? Another period. It should be this 25, and then we go to check it. So it tells 92.35, 92.35. It is the average size of swing, 92.35. 1.14 is okay. It should stay somewhere around 1.11 plus minus 0.07 range based on pound Canadian calculations. Yes, 1.11 plus minus this. Let's go to 4 hour, 35.54, 35.54. 1.13, it stays okay. Then we go here, 11, 17.61. $1.17, it is also okay within the range. Then we go to 30 minute, it is 10.44, it's 10.4.4, 1.12. Then we go to 15 minute and it says 66.0. 114, and then we go to 25 minute, to 5 minute to calculate the distance, which is 30:1. Okay, 113, 113, 114, 112. You see, what are the conclusions? So what conclusions can we draw here? First, that the larger the period of the algorithm, the smaller is the difference between the algorithm and the previous period. Yes, so if you have an algorithm of 50 bars period, the difference between 50 and 60 period will be less. Okay, regardless of the time frame and the pair, the ratios between these algorithms stay the same. And this is something that is very remarkable. It needs to be very, I don't know, needs to be thought about, the ratio between this. Regardless of your pair, regardless of your time frame, this is very interesting. So something that is almost the same. 1.43, 1.43, 1.46, 1.46, 1.44. And if you open this pound Canadian, you will find almost the same. 47, 44, 40, 44, 43, and 46. I don't know it yet how we can profit from this. Maybe if I'll give it a hard thought, I will find something interesting. But this is kinda interesting, simply interesting. Okay. Now let's go backwards. First of all, what I want to say is that this is the average correction size, this is an average impulse size. So I start from the hypothesis that an average correction, so this is an impulse, an average correction, typical correction, is 50% of an impulse. So it is twice less than the impulse lag. So if we have an average distance of this, let me show you my calculations that I had. So imagine that you have this. If you didn't watch the previous video, it will be very interesting for you, I suppose. So this is the total size from here to here. If we split this by 3 parts, 1, 2, 3, 4, 5, 6, 7, we cannot split by 3. I'd rather move it this 1, 2, 1, 2, 1, 2. Now we can split this by 3. Okay. If we know that an impulse is twice greater than correction, yes, it means that our correction is x and our impulse is 2x. You see that? Okay. So the correction and impulse, they form two swings, one swing and another swing. On average, the size of swing is 381.6. So how do we know the average of this correction and impulse? We simply add these swings together and divide by 2. If we add them together, the total thing, and divide it by 2, we will see this distance. So it means if you divide by 2, so this is the total range, you know it, correction plus impulse, and you divide by 2, you will have an average correction, which is 381.6, and the same average correction is 381.6. So you see that average correction from here to here. Okay, so what is the formula then? We know that the total distance of this is 3x, yes, and we know that the total distance in pips here is this, equals 381.6, sorry, 81.6 multiplied 2, yes, so the x equals this divided 3, yes, this is the formula, x equals 381.6 multiplied 2 divided 3, and this way you know the size of correction. Knowing that an impulse is twice more than the correction, you get that average impulse size and average correction size. So what it gives you, basically when you start trading, maybe you start your high time frame analysis, you look at your daily, and you have an impulse and you have a correction, and you know that with this kind of swing identification algorithm that you are using, and you are using, for example, 10 period swing identification algorithm, you expect your impulse be this kind and your correction be this kind. So you simply calculate the distance between this, size of that, okay, and if it is close to this 364 number, you expect the correction to end here. This is very simple. You expect the correction to end in this period. Wonderful. Now let me do something different with this. Let me calculate the inverse. If you wish only corrections of this size to be displayed, so it means that your algorithm should be based on this correction size. So nothing less than your average correction size will be displayed if you use it in your analysis, yes. But what I'm gonna do, I'm not going to have it this way. I will change it. So I'll need to do some changes in my indicator to change the source code. So I'll be back very soon. Okay, I have changed my indicator, and now it is not showing only the distance in pips, it is also showing the distance in times at the same time. Okay, so if we go here, we see the pip distance, and in brackets we see the number of bars. So this is the average pip distance, this is the average bars for this very algorithm. Let us start, and what I want to do is to change it here. 1, 2, 3, maybe I'll go here, and I will perform some other research here. So I am average bars. I'll type the number of average bars here, and I will do this kind of calculation as well. So it will look this similar way. Okay, and then I will calculate the average impulse distance, average correction distance. So I will need average impulse time and average correction time. Average impulse time. Okay, average impulse time, and here I will type the average correction time. Now it will make a bit more sense because previously we had it slightly not correct. Now it is more correct. Okay, so let's start from the very beginning, and the pair is EURUSD. Let us start from the very beginning and analyze that one more time. So what if I go to daily algorithm and I start from 5 period? So it says I have 7 bars on average, 7 bars. Then if I go to 1440 here, I have also 7 bars. What a coincidence. And if I go to 60, I have 6 bars. Okay, they should stay the same, somewhat 6 to 7. If I go to 30, it says 6 bars. See the pattern? And if I go to 15 minutes, it says 6 bars. Okay, and if I go to what is that, 5 minutes, it should say 6 to 7 bars, 6 bars. Wonderful, very interesting. Okay, if I go to period 10, the swing identification of period 10, so I have 13 bars. Okay, I bet all of them are 13 bars. If I go to period 15, we have 14 bars. 14 bars. If I go to period 30, it is 13 bars. If I go to period 1 hour, it is 13 bars as well. Okay, if I go to period 4 hour, it is 14 bars. Wonderful. And if I go to daily, it is 14 bars as well. 15 bars. Okay, daily has some deviation from the rule. 13 to 14 bars is my average thing. Okay, how can I calculate my average correction time duration and average impulse time duration? Yes. Well, I know that my average time is 7. And my average time correction, average impulse correction. Correction is not that, and impulse is not that easy when you have it. For example, this is a correction and this is an impulse. And although we have that distance to the upside twice larger, yes, than this distance to the downside. Yes, distance to the downside twice larger. In time, they are mostly equal. Majority of them in time, they are mostly equal. The impulse looks more faster movement because the distance that it moves to the upside is twice larger than the correction, and the correction looks like movement that is slower, moving slower, because the distance is twice less, the pip distance. But in both cases we have same bars. For example, if we have bars to the upside, they are larger bars, 1 2 3 4 5 6, for example 7, yes. So we have to the downside, we will calculate the fact that is red, yes. So it is 1 2 3 4 5 6 7. So in impulse we have larger bars, large expansion bars. In corrections we have smaller bars. So this is the difference between them, correction and impulse. So larger bars, smaller bars. You can also confirm your impulse if you use an ATR. It is one of the greatest methods to find impulses. When you have an impulse, you have that average true range going higher, and when you have a correction, average true range goes lower, because within correction periods the candles become smaller and smaller and smaller, and within impulse periods candles become greater and greater and greater. So it is my observation. I didn't test that yet, but logically it looks this way. Only logically. Well, let's go the inverse. Let us go here from 15 period reversal factor, 15 period, and we'll do it this way. Okay, the correction is 22, 66, 44. So the correction is 22 for 15 period. Then we go to 4 hour, 22 as well. It is amazing how they coincide. 19. So it is simply equals to this, and this equals to this. Okay, so it is this one. Let us format them this way. Let me format this way and format this way. Okay, we also have some numbers. Equals this. This equals this as well. So we should calculate it this way. Oh, okay, I did this calculation. Oh, it does the calculation automatically. Very simple. Nice, it recognized the pattern that I'm looking at, and it did the calculation automatically. So we have 22, we have 19 here on 1 hour, I suppose, yes. If we go to 30 minutes, we have 21, which is very close to that. If we go to 5 minutes, it should be 21 to 22. Oh, sorry, 15 minutes first. It should be 20, 20, 20 on 15 minutes, and 5 minutes, somewhere around the same. Should be the same. 21. So it gives us kind of advantage, and the advantage is of this. You know that price should go to this level because you know the average correction size, which is this. Yes, so it should go to this level, And also you know that price should spend this time, because you know that the time of that correction or an impulse is this. You see, you know the time, you know price, and this gives you an advantage when it should appear at this level. Okay, I don't think that it is possible to do a mathematical trading model, I mean the strategy that will always exploit that stuff, because they fluctuate, because they deviate, and we only talk about the averages. So on average it is this, on average it is that, but it is less sometimes, it is more sometimes, and it is simply average. So you should understand the deviations. And well, we will see. But to perform the high time frame analysis, you know that it should go here by today, for example, and we should start some buying pressure today. So you just execute your bullish ideas, your bull patterns or whatever, and you go with the flow. At least you try to go with the flow, because on average price starts the movement from this time and this price, and you will see that these patterns repeat over and over again. So we have the same ratios, 217, 217, time ratios as well. Let us switch to 20 minutes and let us see what we have on 20 period, sorry. And the number of them is 28, so it should be the same on every 28 to everyone. If we switch to 15 minutes, it is 27. If we switch to 30 minutes, it is 27. If we switch to 60 minutes, okay, it is 28 to 27. If we switch to where we switch if we switch to 4 hour, we have 30, slightly deviated. And if we switch to daily, we have 30. Okay, the largest deviation. I am using the 100,000 bars in this market research, so I'm analyzing 100,000 bars. Of course, my daily time frame does not perform that very many bars, because my first date that my broker allows to is 1998. So 1998 is 20 years back. So if we go 20 years back, and even if you multiply it 365, so it is 700 bars. We should of course delete some weekends. We don't have weekends here, so the number of bars is not that much, not that many, only 700. If we delete this 2/5, so we should calculate what is that 2/5. 2 means weekends, and if we divide by 7, so we'll find that weekends take part of 0.2857 of the whole week, and if we multiply it by 750, so we know that it is only 2,400, and then we should detract by 750. It is 5,000 bars only, 5,000 bars available on daily and until you hit your limit of 18. That's why it is not that much precise as, let's say, 5 minute or 15 minute that allows me to have all this range of 100,000 bars. I don't even think that 14 to 40 has the same. I think 240 is not that as well. Okay, so let me also calculate it. I'll go to Pro, and this is the first date, and as far as I think, so what is this bar? If I go here, oh, let me delete the application 9. So I will just calculate what is the number of this bar. Impossible to do that. Okay, it was 520 something, so it immediately replaced by another information, so I need to make this function available one more time again, but earlier it was available here in NPS software. Okay, I just simply forgot about that. Oh. Well, let's go back through. So we are looking at 20 period, yes? Period 20. And what I'm looking at is 100,000 bars. If it has not that many, then it will use whatever it has. If it will have that, then it will not use that. Let us switch to 25. Switch to 25 period and do our further calculations. So on daily we have 42. On 4 hour we have 38. On 60 minute we have 37. Okay, on 21, on 30 minute we have 33. Well, you see, we have tendency to decrease. It is not the same. And on 15 minute 35, maybe not. We have tendency to increase. Should be 35, not 25. And on 5 minute 35 as well. 35 as well. Okay, here are the results. We will try to apply them somehow. Okay, let me do it this way. For example, if I apply my MPS 2.5.2 Pro with an algorithm of price extreme, and the period of that algorithm will stay 10. Okay, so I know that let us go to 60 minutes, for example, one of the most common time frames, and let me delete this application 9 indicator. We don't need it anymore. Okay, so let's go home and let us find something. So what information we have based on 1 hour? This is the 1 hour, and if we use 10 period, the average impulse should be 13.6, average correction should be 68. Average correction should be 68, and it should take 13 bars. 13 bars. Okay. This one is very small for that calculation. So we know that this is 66, but it is not a correction, it is an impulse. So the impulse should be 136. Okay, let's go to measure it. 136, no. Let's apply some time. 13, it should be 13 bars. 5, 6, 7, it was 9 bars, and we then had some bounce to the upside. And if we were waiting for 13 bars, somewhere here the bounce already started. So the pattern doesn't seem to coincide with that, but it is only one pattern. Okay, so we have 6 bars. If we treat this as an impulse like that, yes, and if we treat this as a correction, then we have 27 bars, it is greater than 13 bars. And if we treat this as a range, 100 bars, it is greater than 68 bars. Okay, I don't yet figure it out. You will have 13, 27, 13 goes here, 13 bars goes here, and the distance here is 170. This is greater than the average impulse. Okay, I'll need to think it, how to apply the information of averages to these patterns. But it may be a very good idea to analyze the higher time frame. So let me apply some back the indicator here. So we'll have 10 period price extreme. Okay, let it be this way. I'm not going to look at these patterns, so I will only look at the impulses and corrections. So based on my market research, I know that the average correction should go at least how many on daily. We go daily, we use this 10 period. Okay, 364. It is 340, 360 will go here, and it is 116.67. 167. I will do it this way, 116.67 on the average, and then I know that it should go to 13 bars. We now have 7, 8, 13 here, 30th of August. Here it is. Now we have the price projection and time projection, and let it also be in black. So somewhere at this point price should continue the downside movement if it is a correction, if it is not turned into an impulse. Okay, so if we switch to 40, so what we have on 40, we have an impulse started. Yes, an impulse started, and based on this algorithm we know that impulses on 240, they look this way: 282. Why it is an impulse? Because we break this neckline, so 282. So it should be $28.21. Okay, $28.21. Oh, it should go here. 28.21. $18, 10 and 7. 18, 10 and 7. So the impulse should terminate here, if it is an impulse to the upside. Okay, and it should also terminate within the range of 5, 6, 7, 8, 9, 13 bars on 26. On 26. So based on 4-hour information, we should travel to here if we have an impulse. Okay, so there are two possibilities. Based on daily, we should start our movement from here, from this projection. Based on 4-hour, we may go higher here. Right now it looks like conflicting information, but what I mean, if we find something that coincides, if we find something that hits the same area, then it may be a very good situation when you can enter that. Okay, so I hope you found this video useful. If so, give me a thumbs up, share this video on social media. Until then, good luck and good trading. I hope to see you soon.